All right, welcome back. Today, we are cracking the code on one of the biggest ideas in trading, support and resistance. We're going to peel back the layers of a price chart and really get into the story it's telling us, this hidden battle between the people buying and the people selling. So let's get right into it.
I mean, you've seen it, right? You're watching a price and it's moving along and then bam, it just hits this invisible wall and turns around. Or maybe it's dropping and it hits an invisible floor and bounces right back up. Well, I'm going to tell you it's not magic. It all comes down to what people are thinking and feeling, and today we're going to make those invisible lines crystal clear.
You know, this zigzag pattern you're looking at, that's basically the heartbeat of the market. The price goes up, it pulls back, it goes up again. But those peaks and those valleys, they are not random at all. Those are the invisible barriers we're talking about, and once you understand them, you can start to read the story of the chart. Okay, so the easiest way to get your head around this is to picture them as floors and ceilings. Seriously, just imagine the price is a little bouncing ball, and it's moving between this floor below it and a ceiling above it. Let's break down exactly what that means. So first up, we've got support. Think of this like a safety net, or a solid floor. When the price of an asset drops down to this level, a whole bunch of buyers suddenly think, hey, what a bargain. They all rush in to buy, and that creates so much buying pressure that it literally stops the price from falling any further and starts pushing it back up.
And here you can see it plain as day. Each of these low points, where we've marked support, is basically a moment where all the buyers got together and said, nope, the price is not going any lower than this. They've built a floor with their buy orders.
And on the flip side, of course, you've got resistance. This is the ceiling. As the price climbs and hits this level, the sellers start thinking, wow, this is getting a little expensive. Maybe it's time to take some profits. They decide to sell, and that floods the market with sell orders, putting a lid on the price and stopping it from rising.
Looking at the same chart, you can see these ceilings forming right here. Each one of these peaks, labeled resistance, is a point where the sellers dug in their heels and said, that's high enough. The buyers just couldn't punch through that wall of selling.
So here's the really crucial thing to get. These floors and ceilings, they're not just some random lines on a chart. They are the direct result of human emotions, of people making decisions on a massive scale. It's all about what the crowd believes.
It really is just a giant tug-of-war of beliefs. Down at a support level, the main idea in everyone's head is that the asset is a steal. It's undervalued. So what do? They buy. But up at a resistance level, the story changes. Now the belief is that it's overpriced and it's time to sell. It's just a constant battle between those two feelings.
So how do traders actually use this stuff? Well, they don't just sit there and watch these levels. They build entire strategies around them. And really, there are two super basic ways to trade based on these floors and ceilings we've been talking about.
And it pretty much boils down to this. You're either betting that the level is going to hold, which is called trading the bounce, or you're betting that the level is going to fail, which is trading the break. So if you trade the bounce, you expect that ball to hit the floor or the ceiling and just reverse direction. But if you trade the break, you're betting it's going to smash right through it.
But, and this is a big but, here's where things get a little trickier. This is where a lot of new traders can get themselves into trouble. Because in the real world, these levels are almost never perfect razor-sharp lines.
Exactly. What happens when the price just kind of pokes its head through the floor for a second and then jumps right back up? Or it just grazes the ceiling and then falls back down? This is where the real art of reading a chart comes into play.
See those little thin lines on the candlesticks, the shadows or the wicks that are poking just below that support line? That's the market testing the level. It's like it's dipping a toe in the water to see if there are enough buyers down there to hold the line. And in this case, the buyers showed up, they held strong, and the price popped right back above support.
And here is the classic trap. This is what we call a false breakout. It looked for all the world like the floor broke. And you can bet that sellers who were trying to trade the break jumped in with both feet, thinking the price was about to collapse. But then, whoops, the buyers rushed back in, the price shot back up, and all those sellers got trapped in a really bad spot.
Okay, so if you remember just one thing from this entire explainer, please let it be this. Don't think of support and resistance as a single price on a line. You've got to think of them as zones, as areas. They are messy, imprecise regions where that battle between buyers and sellers just gets really, really intense.
And hey, here's a little pro tip for you. If you want to see these zones more clearly, try switching your chart over to a line chart. A line chart gets rid of all that noise, all those spiky wicks, because it only shows you the closing price. It really helps you focus on the more intentional moves and see the broad zones where the price actually reverses.
All right, for our last big idea today, we've got one of the coolest and most powerful things you'll see on a chart. What happens when a ceiling, that tough resistance level, is finally, truly broken? And that's the key right there. As soon as a major barrier is broken, the whole psychology of the market toward that price level can flip. What everyone used to think was way too expensive suddenly starts to look like a pretty good deal.
And would you look at this? It's beautiful. The price struggles, it fails to break through that resistance ceiling again and again. But then it finally smashes through. And then look what happens next. It comes back down to test that exact same level, and it holds. The old ceiling has become the new floor. This role reversal is a huge signal that the market's mood has fundamentally changed.
So let's not forget, at the end of the day, behind every single little tick up or down on these charts, there's a person making a choice based on their own hopes, their own fears, and what they believe is going to happen next. It's really just a very human story.
So the next time you look at a price chart, please don't just see a bunch of squiggly lines. Try to see the story. See the battlegrounds where the buyers and sellers fought for control. See the floors they built and the ceilings they defended.
Because now you have a new way to understand the language of the market. That chart isn't some random mystery anymore. It's a battlefield map. Thanks for digging into this with us, and we'll catch you on the next one.